And for an early look today, what we can expect from our market, we're joined now by Evan Lucas from IG in Melbourne. And Evan, it seems like the first story this morning will be all about Janet Yellen and her testimony, very positively received.
Very positively received indeed, Nigel. I think also what you've got to look is that basically ever since Adam Greenspan came about, that the incoming maiden testimony from Ben Bernanke and now also Janet Yellen has been completely following the policy line from the person before. So that was a positive thing. It was very interesting to actually see how the markets reacted to that. And if you look across bonds, if you look across currencies and you look across gold, also across the equity markets, they all took it slightly differently. And that suggests that yes, it was indeed a very well received speech, because she didn't really step outside the line. She didn't really sort of set out any sort of mandates that she may want to do. She kept the line as is. So we did see bond rates actually jumping up. Now that should be expected, considering that she did say that obviously they are going to continue to unwind their monthly bond buying purchases. So that is an unwinding of QE. That is what you should expect by theory. But at the same time, you saw gold also jumping up as well. Now that was probably a little bit indifferent considering what you're seeing. Again, you probably may have wanted to see gold go down. But then if you have a look at the US dollar, on the initial reaction, it actually went the other way. So they saw it as slightly dovish. The bond market saw it as slightly hawkish. The gold market saw it as slightly dovish. Yet the equity market saw it as a nice little play as well, and they popped up quite strongly, up around about 1.2% for the Dow on the close. So very interesting trading night. It does mean that obviously the status quo is there. It means that they will continue to gradually untaper their current situation. So very positive from that perspective. She was very quick to sort of reiterate that the current weakness they'd seen in their employment growth was obviously a one or two off thing, and on the longer term trend, it was certainly the way the Fed saw it. So it was very positive, and that will definitely throw through to our market this morning. Also in Asia, it does look like a very positive session indeed today, Nigel.
If we take a look at the larger macro picture, Evan, we're expecting some numbers, import-export out of China today. What are you looking for?
Yeah, that's going to be really important in terms of what we've seen. So with the last trade balance that came out in January, they actually had, on a nominal basis, the largest nominal export number they've ever seen. So 207 billion US dollars were exported, the second largest import number they've also seen as well. So it was therefore seen as a slight miss. However, as I said, on the nominal basis, it was good. Looking at their trade balance today, first time we get to see them back after the Chinese Lunar New Year. So there could be a slight distortion. But again, I think we need to be looking at the positives coming out of China. I think again you're going to see a very good record in export number. We have seen, you know, the US and also Europe having a very, very strong run towards the back end of last year. That certainly seems to be the case in the start of this year, particularly out of Europe. They are doing quite nicely. You can have a look at across their bond markets, also across their equity markets, that suggest that there is confidence growing. So that should be a good number for China, and that will definitely throw through to us here in Australia. And that leads into earnings season. It leads into what we're currently seeing with particularly the material space. They've been on a bit of a downward slide, but there are notes coming out from Credit Suisse and particularly out of Deutsche and JP Morgan suggesting that over the next couple of weeks you could see, and this is JP Morgan's call, as much as a 20% bounce in those material plays. So watching that trade balance today, that could be a spark for those calls we're seeing out of the brokers, that there is a very big upside potential coming in those material plays, because we've had such a good export numbers coming out of China to their major markets in the US and also Europe.
Evan, you mentioned reporting season today. A number of companies set to release their results, among them CBA. What are you tipping in terms of results broadly, and will they be moving the market as well?
Yeah, and that comes down to how we sort of look at today. So at the moment, the SPI futures are only pointing up sort of 30 to 35 points. CBA will probably be the biggest mover. Again, there is a real big chance for another record profit coming out of CBA. Cash profit is expected to come in at 4.17 billion Aussie dollars with a net profit of 4.18, so near enough to basically the same. Everybody will be watching several things. Obviously, from an investor point of view, everybody talks about that yield. You know, there's 800,000 retail investors out there that really do chase that CBA yield. Expectations between $1.80 and $1.85, so anything above that is a really good beat. Again, other things to be watching it from an investment side, watching that net interest margin, expectations at 2.14. I think if they can get on the upside as well, considering how strong East Coast growth has been in the back half of last year, housing prices, particularly in Sydney, have been very strong, and CBA should take advantage of that. That's where you'd be wanting to watch as well. And I think the other one that was quite interesting coming out of ANZ yesterday, which we'll be looking at for CBA, is bad and doubtful debts, asset current sort of strength is certainly on the way up, and that was what came out of ANZ yesterday. Their bad and doubtful debts dropped to 190 million. That is a very, very sort of solid figure, and something that I'd hope CBA can do again. But there also other areas. Watch their wealth division as one area they've been really, really concentrating on quite heavily. As I said, retail investment is also one place. So watching CBA, it is due out pretty much any second as we speak. It'll be a very big market movement. If they have a better than expected result, the market could actually start testing 5,300 points today. So watching CBA very, very closely. It is our largest stock on the market and will move the market very, very heavily today depending on how their results go.
Could be positive signs all round today. Evan, thank you.
Thanks, Nigel.